I want to share with you an idea that actually I spent maybe about 2 hours with my son and one of his colleagues yesterday. And what I want to say is, first of all, there's no silver bullet or magic bullet. That really just have to make yourself available and stay in the game. And staying in the game is whatever type of investments you're doing. If it's property, real estate, commodities, in my case, also stocks, trading stocks, and also long-term holding of stocks. And really what I want to talk about this morning is having a long-term approach in stocks. And what we did was we looked at a screen that we screened stocks for long-term profitability. Pretty much it's in Investor Business Daily, and it's called Long-Term Leaders. And within that, you can scan them within the screener or use a data button to highlight the ones that are the strongest of the strong. And some of the stocks that came up were like PayPal, obviously, Microsoft, Pool, Viva, AMED. And what you do is, or what we did was, we identified the ones that have the least amount of debt, have strong earnings consistencies from a fundamental basis, and actually then put on a long-term strategy of scaling in and scaling out using long-term parameters of, let's say, if it's a 50-period exponential moving average, 100-period exponential moving average, 200 exponential moving average. So it's almost a combination of relative strength and momentum to trade a very concentrated portfolio in diverse sectors and to see what that would look like. And it was shocking, actually. I mean, the idea was we had made a $300,000 account, put in 15 positions, 20,000 each, see what happened. It scaled, the model scaled out in 2018, because that's when we did the start date in 2018, just to get a more recent view of it, because also the relative strength is changing. It scaled out in 2018, which was rather ugly. Stayed 100% invested for great periods of time, long periods of time when the market was healthy. And then obviously in March and April, it's really scaled out in March, beginning of March. And basically the model goes from 100% long to 50% long to 0% long, means you're out of the market. So you mitigate your risk on the downside. And then when things start turning around, it scales back in again. 50% long, 100% long. Right now we're starting to see some shares getting hit to go to 50%. Let's say Salesforce was one of them. But the idea is to take a very long-term approach that as long as these stocks stay on a relative strength basis, it becomes the universe, and then put the overlay of a technical analysis. Very simple, because in the real world, the only thing that can really hold up are simple ideas. So if you have any questions, you can ask them. I mean, I'm here to help. I'm here to educate. None of this is personal advice or personal information. I'm just looking to really get you going. I mean, it's not easy. It's taken a long time. I'm trying to teach my son this to get him going, get him more successful, because one day he'll be managing this. So thank you, and please subscribe to me.